Have you ever been on an open highway, pressed the pedal down, and felt that surge of pure excitement? It feels incredible to move that fast. And right now, watching the Indian stock market feels exactly like that. This speedometer shows you just how much momentum we have. In late 2024, the Sensex, the index that tracks India's biggest companies, hit a record peak of 86,159.02. But driving at top speed is incredibly dangerous if you do not know the rules of the road. Putting your life savings into a peaking market without understanding how it actually works is a lot like driving a car while blindfolded. To reach your final destination of financial freedom, you need to learn the rules of safe driving. Let's look at how to navigate the traffic so you can avoid a life-altering financial crash. Smart drivers pay close attention to the accidents of others. If we look outside of India, we can see the wreckage from global market crashes in countries like Japan, China, and Italy. This chart shows how those markets hit a peak, crashed, and struggled for decades. These steep vertical spikes right before the drops are economic bubbles, driven by hype rather than profits. Eventually, that hype runs out and the bubble violently bursts. When reality finally hits, panic sets in. Everyone tries to sell their investments at the exact same time, creating a stampede that crushes the market's value in a matter of days. Chasing a booming trend without understanding the real value underneath is a guaranteed way to cause an accident. And as history shows, repairing that financial damage can take the rest of your life. To prevent these accidents, we have strict traffic police monitoring the market highway. That is the Securities and Exchange Board of India, or SEBI. In 2023, SEBI found that some companies were luring in new investors by showing off massive profits from the past, making it look like a guaranteed easy ride to wealth. SEBI enforced a strict new rule. Every single advertisement must now explicitly warn you that just because a fund made money in the past, it doesn't mean it will make money in the future. They are also setting up a dedicated agency to independently verify these claims. This ensures that when a company tells you they are performing well, an independent third party has checked their math. We can see how they feel about the market by looking at reports from the United States Trade Representative. These foreign investors have a specific concern. The Indian government provides a sovereign guarantee for LIC. Essentially, the government personally promises to pay back the policyholders if the company ever runs out of money. Foreign companies feel this creates an uneven playing field. Understanding who else is on the road helps you see the true stability and the rules of the market you are entering. Every long journey eventually requires paying highway tolls. In the world of investing, that toll is the capital gains tax, the fee you pay the government on the profits you make. This table compares global tax rates. For long-term investments, India charges a 12.5% toll. For perspective, the USA charges 20%, Russia takes up to 22%, and the UK toll goes as high as 24%. While tolls are mandatory, your best safety feature is a systematic investment plan, or an SIP. This is your seatbelt. It is the discipline of putting a small, fixed amount of money into the market every single month, no matter what. However, most people unbuckle that seatbelt way too early. Data shows that overall, only 3% of investors stay invested for more than 5 years. For self-directed accounts, only 12.4% keep their monthly plan running past 5 years. Stopping your monthly investment early because of boredom or a temporary market dip is the most common reason people never reach their destination. So keep your safety checklist in mind. Respect the traffic police warnings, ignore the hype of past returns, pay your tolls, and never unbuckle your monthly investment plan. Disciplined investors treat the market like a carefully mapped road trip, where following a plan leads to a much safer arrival than trying to gamble your way through. In the end, true wealth is built by staying safely on the road for the longest time, not by trying to drive the fastest.